Hi, this is Dustin with Dustin's Dollars. Today, I'm going to be talking about Bitcoin and differentiating Bitcoin from other cryptocurrencies, talking about why I think Bitcoin is fundamentally different and that why you might hear the phrase Bitcoin, not crypto, and what that means. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that all opinions that I express in this video are mine and do not represent those of any company or any other individual. This video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So there's this phrase, Bitcoin, not crypto. And I've previously spoken about Bitcoin as digital gold. And a couple of the fundamental tenets of Bitcoin as digital gold were that Bitcoin is decentralized, that it is stable, that it has a fixed supply, and that it has broad adoption. Now, I'm not going to talk about fixed supply too much because there's plenty of cryptos that have fixed supply. That's pretty that's a problem that Bitcoin solved, how we can actually implement that, and then but is easily copyable by other cryptocurrencies. I'm also not going to focus too much on broad adoption, even though I believe Bitcoin does have broad adoption. Other cryptocurrencies have that today and might have it in the future. But I'm going to focus today on those first two tenets of this investment thesis in Bitcoin, or at least in the analogy of Bitcoin as digital gold, and that is Bitcoin being decentralized and Bitcoin being stable, and talk about why I believe that Bitcoin achieves these in a way that other cryptocurrencies do not. So, talking about Bitcoin being decentralized, one of the absolute largest important aspects of Bitcoin is that no one controls it, right? There is no Bitcoin CEO. There's not even a concentration of folks who let's say develop Bitcoin or run the Bitcoin network in one particular country or any aspect like that. And there's really, as far as I understand things, no one that can control Bitcoin and Bitcoin network. And a couple of things here that sort of underscore that are that the miners, the folks that actually doing all the hashing, that that create the new blocks on the network are distinct from the nodes, and the nodes can be run are much smaller things. I have a whole video talking about explaining some of this stuff, but the nodes are easier to run. You can run on your home computer if you have one, and that's completely different from the miners. But the Bitcoin network requires both of these to be sort of adopting the same policies in order to work, and folks broadly have. And so having this separation adds to the decentralization in the sense that nodes, many people can run their own node and help enforce some of the policies that underscore the Bitcoin network. No one holds a majority of the supply, and I think no one even holds 20%. I think there was a recent proof of reserves that came out from Coinbase as an exchange, who you'd expect to be a very large holder of Bitcoin. I think they proved that they hold about 10% of the total capacity, the total amount of Bitcoin. I think they proved about 2 million Bitcoin. I just saw a headline, and so, but I believe that was the number, and that would be about 10% of Bitcoin, which is a huge amount. But what that says is, nobody holds a majority of it, because there are other. You look at other cryptocurrencies, you can see there are folks who hold much larger percentages than 10% of the outstanding tokens, and most of that is not actually. It's not. Coinbase might hold the keys for those, and so it's technically correct to say that they are holding them, but those are mostly in a custodial relationship, in the sense that it's not actually shouldn't actually be in the control of Coinbase, in the same way that your dollars you deposit in a bank are not actually in the control of the bank. They're your dollars. So I think it's misleading to even it's generally misleading, I think, to even say that Coinbase would hold 10% of the supply. I think the amount of Bitcoins that are directly in their control is drastically lower than that. And there, to my knowledge, are no private entities or any other institutions, I should say, that hold any larger stake than that. Similarly, nobody, as far as I could tell in my research, holds even 10% of the mining capacity, right? The hash rate for the Bitcoin network. I think some of the largest providers of mining capacity, largest companies that have hash rate that I could see have roughly 3, 4, maybe 5% of the overall hash rate of the Bitcoin network. And so that's fairly fairly distributed because the amount that other entities hold goes down from there. And one other super important thing here is because nobody controls it and nobody holds all these majority stakes and could do manipulation because of holding some of this power. Nobody can actually create more Bitcoin, right? And this is something that we've seen in other cryptocurrencies where they are not quite so decentralized, and folks can actually change the policies in terms of like how many Bitcoins, how many of the tokens for whatever cryptocurrency we're talking about get issued every time there's a transaction, or get issued every time there's a block that gets created. And no one can really take down the Bitcoin network. And this is, I guess it's technically false for me to say that. If the internet was broadly taken out, the Bitcoin network, generally could go down. I mean, I think anybody who still has some sort of connectivity through satellites or whatever could run some sort of the Bitcoin network still. It's pretty robust in its design, although I'm not sure that I would say it's really operating at capacity like it is today. And you could have sort of a fragmentation if such a scenario were to happen. But generally speaking, the architecture and the design of the Bitcoin network is very, very decentralized itself from a software architecture standpoint, and it's designed in a way that nobody can really take it down. Meaning, like this is partially a function of the fact that the mining capacity and all these miners are fairly decentralized, and there are many, many of them. And so you saw things like, last year, I believe it was, when mining was largely banned in China, and there were a lot of miners in China, and so there was a large portion of the overall, hash rate of the Bitcoin network that was in China that kind of got turned down and moved, essentially moved somewhere else. A lot, I think went to the United States, but a lot of that capacity just went offline over a fairly short period of time, and the Bitcoin network just continued to run as expected, as you'd sort of predict if you dig in and understand the architecture. So those are some of the points that sort of, to me, help convince me and believe that Bitcoin truly is decentralized. I guess another note that I didn't put here, but it would fall under sort of no one controls Bitcoin, right? There was somebody who initially invented it. It goes by the pseudonym of Satoshi Nakamoto. Nobody actually knows who this individual is other than Satoshi, if Satoshi is still alive. And that person might hold that person was active early on in the first year or two, maybe three of Bitcoin's existence, and then they sort of disappeared off the internet, and nobody really knows who they are. It's been roughly a decade since then, and there isn't, even if that person were to come back, I'm not sure they could really control Bitcoin, even if they wanted to. Right, it's so decentralized at this point. But the interesting thing is that, I guess that's the interesting point, right? Even if they did come back and they wanted to be sort of this figurehead and try to direct what happens with Bitcoin, they might gain some influence if they were able to prove that they actually were Satoshi. But I think in general, things are so decentralized right now, and people have their own understanding and their own opinions about Bitcoin that, at best they would be, a similar figure to some other big names in the Bitcoin space, but that are, none of them have any sort of ability to really control Bitcoin, other than through their ability to, put out good ideas and influence the community in that way. The other point that I wanted to really touch on today was that Bitcoin is stable, and I think this is really, really important that differentiates differentiate Bitcoin versus other cryptocurrencies. And this is that Bitcoin does not really require new features. You look at a lot of other cryptocurrencies, and they have a roadmap of all the things that they want to develop in order to sort of realize their vision and to actually, be able to truly capture the value that they intend to capture with their cryptocurrency or crypto token or whatever you want to call it. And Bitcoin does not, right? Effectively, Bitcoin's killer feature is that it's decentralized. It's decentralized. There's a fixed number of them, and that it's basically like digital gold. In the same way that gold doesn't need any new features. Gold, has held its value through thousands of years, and it just continues being gold. It is stable, and that is just a differentiating factor from Bitcoin versus other cryptocurrencies. It's slightly a lie for me to say that Bitcoin hasn't changed, and hasn't had new features added to it over time. But most of if you really dig into the details on these things, right, there have been some, quote unquote, large releases for Bitcoin that have happened. There was the SegWit and Taproot, if you want to go look into those for yourself. But most of these were sort of, I don't want to say, small small internal architecture changes for how things work. It's not a fundamental change to Bitcoin overall. And most of these were kind of changing things around so that, performance could be better. That's effectively the focus of new things on the Bitcoin network. And this is partially because, and I put this as a second bullet point, that there is an ethos in the general Bitcoin community of resisting changes, right? Most people will just say, keep Bitcoin running, right? So that we can continue using it and don't break it. That's really all. And don't mess up the policy, the monetary policy of Bitcoin of, there's 21 million Bitcoins. And, other than that, like, we don't need anything new, right? We just want it to keep working. And again, I think there is some development and some thought that goes into how could this scale? How can we take the same thing, not add new features, but at least scale it to, whatever amount of transactions that we might need in the future. And so that, again, there is some work that happens towards those ends, but this is, I would say, distinct from other cryptocurrencies, again, where they're adding new features to what the token can do. And, one of the largest shining examples of this, cryptocurrencies not being stable and having to build new things and change drastically would be, Ethereum, where they completely shifted how their network works. Like, they shifted from proof of work to proof of stake as their sort of underlying security mechanism. And, Bitcoin has not done that, is not contemplating anything like that. And I think that's because, there's just broad, it's ethos, belief, whatever you want to call it, of folks who just want Bitcoin to continue being Bitcoin because it already is stable and good as it is. And I noted here that when there are these new features, it's sort of a free market to adopt or not adopt this. And, I put this example here of the block size wars in 2016. That's what it's called. In summary, this was some folks who wanted to make the size of the blocks larger so that you could get more transactions in each block, which lets you actually have more transactions, per second, and makes the network, effectively have higher throughput for folks who want to use the Bitcoin network. And there are pros and cons of this. I'm not going to go into it. That could be there are many, many videos out there and folks discussing this. Probably books written about it at this point. But the underlying takeaway that I want you to come away with today is this was a proposal. It got it got proposed and discussed for over a year, and finally a group of folks said this is something we want, so they implemented and started running it. And the majority of the folks in Bitcoin, the majority of the node operators, I would even say, and because I think the miners generally were happy with the block size change, but even node operators, people who actually just run their own Bitcoin nodes and hold Bitcoin and support the network, did not agree with this block size change. And so there was a fork, right? And the one that has the larger block size was forked off as Bitcoin Cash in 2016 or so, 2017, somewhere in there. And those folks continued to go over here. Bitcoin continued operating as it was. And so it's sort of a free market where people could decide what do they want to do with these things, right? The blockchain forked, and these folks looked at this blockchain. Sorry, you can't see my hand. These folks were looking at this blockchain. These folks were operating and looking at this one. And, the market kind of, people voted with their feet, so to speak. And Bitcoin, now I think is much, much, much more resources behind it than Bitcoin Cash. And this is, you see the stability of Bitcoin where even something that's a pretty innocuous change, I think you would say, in the abstract, of just increasing the size of the block on the network so that we can have more transactions per second, folks resisted that change for fairly good reasons, in my opinion. So that is, me explaining why I think Bitcoin is stable. And to differentiate this from other cryptocurrencies, nothing else is more decentralized than Bitcoin. I think there are different ways you can measure this, but one of the things to really think about is if somebody wants to gain a majority stake in that cryptocurrency, how much money would it cost them? Or if someone wants to buy, enough computing power in order to be able to control a majority of the hash for proof of work tokens out there, or something that use a similar mechanism to be able to, control the majority of the mining or whatever you want to call it for that cryptocurrency. How much would it cost them? And I think you would find that the cost for Bitcoin versus the others, is drastically higher for Bitcoin. And similarly, nothing else has more of a history of stability. And I think this one is, I'm fairly confident this is true, only because there might be other cryptocurrencies that could say, hey, we haven't changed since we launched and since our blockchain first started running, but because nothing else has been, no other cryptocurrencies that I'm aware of have been in existence longer than Bitcoin, no one has more history of that. So I think this puts Bitcoin as sort of the most decentralized and most stable of everything that is out there. And there are a couple implications of this, right? I think Bitcoin has been recognized as a commodity, and that is, oh geez, somebody's spamming in my chat. How do I am I able to kick people? No, I can't. Whatever. Not from my app. I'll figure this out later. So Bitcoin has been recognized as a commodity. I think it's been called out. I say recognized. It's been stated as such from, I think, the chair of the SEC and the chair of the CFTC. Excuse me. And that's because it is decentralized and it is stable, right? And so that lets them actually, in the same way that gold is, or wheat, right? These are fairly, have those same aspects. Because of this, Bitcoin can be regulated, right? When you can reason about what the thing is, you can actually write laws and think about how it should be treated. Because of this, it can also, because it's decentralized and mostly because it's stable, Bitcoin can also be built upon if folks are confident that they can build something on it, and that the thing that Bitcoin, what they're building upon, will not be changed out from under them, right? That they can actually reason about it and extend it, to build their systems on top of it. Similarly, folks want to actually invest in mining, right? They want to build a data center to be able to, or a source of energy to be able to mine Bitcoin. That is predictable, right? May not be able to predict what the price of that Bitcoin is going to be, but the actual network itself, and all of what you need to do, and if I have this much hash power, what is it actually going to mean in terms of the network? That is predictable. Again, in a way that, like Ethereum, it is not, right? Folks had built up data centers and were doing a lot of Ethereum mining. I think it's called mining in Ethereum as well. And then they shifted from proof of work to proof of stake, and now all of a sudden, what you had built is no longer relevant. So that was very, very unpredictable. And I think Bitcoin, because of this, because it's stable and it's decentralized and you can rely on it, being the same 10 years from now, it can be stored for long periods of time. You don't have to worry that something's going to change and mess with your tokens, because like one of the things that's been, I've read folks propose on various places is, well, there might be problems with Bitcoin in the future with supply if folks are only holding their Bitcoin. And, maybe there's a lot of Bitcoin that's actually been lost. Some people theorize that there's millions of Bitcoin that, at one point folks had their keys for, and then they lost it. Early on in the Bitcoin network, it really wasn't worth very much. So folks didn't actually care if they lost their Bitcoin. And at that point, 100 Bitcoin was like, $10 or whatever. And so folks didn't actually pay attention and secure their Bitcoin like they might today, for those quantities at least. And I've seen folks suggest, well, maybe if Bitcoin hasn't actually moved for 10 years, we should figure out a way to recycle that into the network, that those Bitcoins can actually be used by somebody. But I think there's a general ethos in the community where you can be pretty sure folks are going to be resistant to that and say, no, we are not doing that. Bitcoin stays as is. We're not introducing these sorts of policies, and we never will. And just in general, because of all these things, folks can build a belief in Bitcoin and hold that belief for a long period of time, right? You can learn about it, you can reason about it, and build up your own understanding, and then build belief. And because Bitcoin is stable and hasn't changed, and you believe won't change, you can actually hold that as a core belief in a way that you can't for other cryptocurrencies. If they're constantly changing, you can't really have a deeply held belief about those other cryptocurrencies. So that is a lot of the implications as I see it. So that was what I want to talk about, and I think that is, hopefully gives you an explanation, helps you understand what it means to say, Bitcoin, not crypto, and to just recognize some of those key differences where Bitcoin does stand out and is different than, as far as I know, every other, cryptocurrency that exists. All right, that is all I want to cover.